Aloha everyone. It's been a while since we made a video lesson, but that's because the market just keeps on melting up in a grinding fashion. Find it harder and harder to find proper setups. I would say high reward, low risk setups. We've had a lot of trades that have been working, but a lot of them have been in the speculative small cap area lately. Not a lot has come from the bigger cap, higher quality names. So, with that being said, we finally got a little bit of volatility on Thursday. And so I figure let's go ahead and analyze the action. As you can see, since November, we haven't even come close to touching the QQQ's 50 SMA. Following Thursday, we actually got a little bit of a close below it on the QQQ. Friday session, hey, good news for the bulls. You didn't see any follow through selling, but it's still an inside candle. It's still, it's up in the air which way this resolves on the short term. I would say, though, we have a lot of indications that it might want to resolve lower, but at the same time, to actually bet on that and bet against this market seems silly to me. But you can see here, this entire climb higher. Look at this bottom indicator. It's been green. We flipped to red. We've also flipped to red on this middle indicator, but more importantly, this lead line is getting towards the zero line. And we're also currently red on this indicator. So remember, if you guys remember from the early video lessons, green lights mean go. A mixture of them, consider it to be like yellow. Red light means no go. So we're currently under red lights if you're a long bias trader. But we started to come out. We're still in the middle of a squeeze. We have not come out of it yet. So we went from being in a trend, loose trend, squeeze, loose squeeze, squeeze, until you start to resolve out of it with these gray dots. You can kind of go either way, really. So a lot of short term indecision, I guess you could say, is out there. Longer term, I still remain very bullish. Demographics is everything. Artificial intelligence is everything. I am very, 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 very bullish for the next 10 years. Any dip is welcome. This is the 50, 100, 150, 200 SMA. Any dip below the 200 SMA, especially with it uptrending now, is buyable. And as you can see on the QQQ, that hasn't happened. Now flipping to the SPY, look at this. Uptrending 200 SMA, reclaim. Guess what? I didn't do it. I didn't get cute, but my idea was get back above the 50 on the daily. We get below the 50. The tickets indicator was above the zero line. Reclaiming the 50, I get long. I ran into the strongest bull market, so that didn't happen. And also, don't forget, guys, I had a major long term load. The biggest load, the biggest position was going to be taken on a reclaim of SPY 350 on an end of day basis. If you guys remember during those video lessons, when I went to cash around here, started to buy back here, 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 but the major load was at 350. We only got the move intraday. Unbelievable. So basically, we nailed the bottom, but we also missed it. And that's how it normally plays out in the stock market. It's very, very difficult to time, very difficult to game. But either way, once it started uptrend, we started piecemeal into the long-term portfolios, and we're still doing that. But just like on the QQQ, this is the 50, this is the 100, 150, 200. We get below the 200, reclaim it on the SPY, just like I should have done back here. Man, yeah, I sometimes you have plans and you just mess up. Mine was the 50. Should have known better, man. Should have known better. But next time we get below that 200 SMA, reclaim 200 SMA, long-term portfolios, whatever cash remains, which isn't a lot, guys. I mean, I've got most of that portfolio invested, all in. Also, recommend get below the 200 SMA if you have 401k plans to increase that allocation so you can take advantage of the upcoming uptrend that will occur. But once again, short term, same situation. We're now below the 21 EMA. Still, though, well above the 50. Inside candle on Friday, heavier volume. Remember, 3 red lights means no go. And also, right now, the momentum is lower. There is no curl higher. To get bullish, I would need a close above the high of the day of this Thursday candle to resume my clear bullish bias, where there is no worry about it, or worry in quotations about a short-term pullback. IWM, which has been kind of the leader lately, we went from being in a trend to a loose squeeze to a medium squeeze. We came out of that loose squeeze. If you thought that we were going to have a powerful move higher, we should have gone from the loose squeeze back into the green dot mode, but instead we've reversed back into a tight squeeze. Normally, that's an indication that whatever instrument you're looking at wants to then move lower, because it tried to move higher when it was resolving out of the squeeze, but it has been rejected and now is back in a squeeze. So we'll see how that plays out. But the IWM recent strength that we've seen kind of on pause here, if you will. It's not dead. We're still in a clear uptrend. We still got the moving averages all aligned. And as you can see here, the last piece of this puzzle, which was right here, is that 150 getting back above the 200 to have a crystal clear bullish trend, which we have in the rest of the indices. The DIA, not one I really follow, but medium squeeze, loose squeeze, we fired and went long. We should have just kept going higher. Instead, we're back in a loose squeeze, and now we have 3 red indicators indicating that we need to slow our roll here on long positions. That being said, am I not going to take any new positions that trigger signals? Absolutely not. I'm still going to take signals, but I'm aware of everything that's going on in the market, right? On a swing trading basis, you got to understand everything's compartmentalized: day trading, swing trading, position trading, long-term trading, well, quarterly portfolios, which I don't think are doing that great this quarter, but that's what we always expect in February. I could be very, very wrong. They're probably beating the overall market because we always end up in leaders. But at the same time, when the market pulls, quarterly portfolios are obviously going to do worse than the market since they deal with the leading stocks. And then we have long-term positions, which have 5 to 25-year holds. So secular bull analysis. Now we're going to the swing trading analysis. Kind of, I like to mix all time frames so I kind of know where I'm at. But like I said, long term, very, very, very bullish. I have 2 of the 3 stocks I'm going to review in my long term portfolios. But whenever it comes to swing trading, this is what I have for setups. Right now, I have Uber as a swing trading candidate. And remember, red lights, they mean no go. But you can see here, kind of, let me inch this up. We started to curl higher here, but then went back lower. Well, we're curling higher again, and we're doing it right off the 50 SMA, which you can see is above the 100, which is above the 150, which is above the 200. This seems like a good, not great, reward risk ratio setup for me. You can get long above the high of the day, or you can just get long above the closing price. I'm going to wait for the high day breach here, and I'm going to calculate my size and risk to this low right here on this bar right there. So I'm going to get long above this high, calculate my size from this low, and risk from this low. If it doesn't work immediately, let's say that it starts to work and reverses, well then I'll probably get out a half immediately. If it kind of like bides its time, but everything looks orderly and constructive, 50% of the stops go here, 100% go here. And that's how I'll be taking Uber. But Uber is in a medium squeeze. If we can curl, get those indicators going green, and we're already long, we should be good. But I want to remind you one more time, green lights mean go. Green lights mean go. Doesn't mean it has to, but the TTM trend momentum, everything was in agreement back here. It isn't yet. So I modulate my size accordingly. So Uber, long-term portfolio name, swing trade idea. NOW is another one. Want to get a little bit more longer term here? Big cup handle. Big cup handle. Going to remind everybody. See, this one didn't play out perfectly, did it? Green, 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 but then it shifted red before green, but still, when they were in alignment and everything was working out of a squeeze, yellow, the tightest, to red, then you fire, good things happen. Right here, once again, green, 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 good things happen. Right now, we're starting to get there. We got green, we're red, but we're in a very long squeeze. So I want to get long above the high of the day, confirms the strength of that Friday candle. I'm going to calculate my size and risk to this low here. Once again, if it works immediately, awesome. Start taking a little bit of profits, start trimming and trailing. If it works but reverses hard on heavier volume, 50% of the stops go there, probably put 25 here and the final 25 here. If it just is nice and orderly and everything looks good, 50% of the stops will go here, the final 50% will go here, as long as it looks good, just in case something bad happens. You never know. Anything can happen in the stock market. I'm always ready for everything. But NOW and UBER are also long-term portfolio names from much lower prices. Also, both have 99 composite ratings. The final long is kind of play on the Dow Jones transportation sector. It's been getting some strength lately. Kind of looks like the IWM. It will match up with the IWM pretty much if you look at both of these. But I'm going to try to get long SAIA above Friday's high of the day. You can see here we are triple red. Remember, triple green, good things normally happen. Triple red, not so much. But we have the indicators curling. They should go green soon. And also, kind of hard to see, but it is happening. We have what we call a slingshot in this trend momentum indicator while we are in a medium squeeze. We just use all these. The only thing that matters to me, guys, once again, if you haven't been watching these video lessons, is price. That's it. Price and volume. Price is primary, volume is secondary. Everything else is just tertiary, quaternary, and just it is what it is. So it's helpful guides to let you know where you're at in the process of potentially taking these long positions. If all of this is green, I'm coming out of a loose, medium, tight squeeze, firing to the long side, TTM trend momentum starting to look like this, I definitely increase size. But with this setup, I modulate the size once again. So here we go again. Get long above the high of the day, calculating my size, probably from this low, and I'm willing to have a final stop at this low, but I don't know. That's a lot. That's the 10%. So here's what will probably happen. If it triggers and fills on Monday, I'll put a quarter of a stop at Monday's low. I'll put a quarter of a stop here, a quarter of a stop here, and a quarter of a stop here. And if that sounds like it's too much work, it isn't. I have Trader Workstation and Interactive Brokers. I'm old. I've learned how to use it. It's actually pretty easy. But another way to do this, you get long, works immediately, all is well. One final stop, either here or here. Forget about this level. So those are 3 trade ideas. SAIA has a 95 composite rating, so keep that in mind. It's a very high quality transportation stock. But SAIA, Uber, and now are 3 trade ideas for the upcoming week.